Taiwan-based travelers rejoiced when the new Taiwan dollar rallied against the US dollar earlier this year. But the currency rise was a cause for concern for export-driven industries, which form the backbone of Taiwan's economy. Now, top semiconductor manufacturer TSMC reported that for each 1% rise in the currency, its revenue would fall 8%. The currency fluctuations have been drawing attention like never before, so we try to understand what's behind the movements and their impact. I'm Divya Gopalan, and you're watching Connected on Taiwan Plus. To explore the intricacies of Taiwan's currency and where it might be going, we have with us in the studio Paul Cavey. He spent 2 decades in macro roles in the region as an economist and now runs the East Asia Econ platform, analyzing market data from China, Japan, South Korea, and Taiwan. Paul, great to have you in the studio with us.
Hi.
So I'm going to start with, of course, the NT dollar and its massive appreciation. Everyone's talking about it. What does that appreciation mean for people like us and then for companies like TSMC?
So I think maybe first of all, just to clarify what's happened with the Taiwan dollar, it is a big change in the context of where the Taiwan dollar has been moving over the course of the last 30 years, right? Like it's been a big change within a short period of time, but it's still not a big change relative to the changes in Taiwan's economy over the course of the last 30 years or so. So I think it's important to remember there's volatility, but it's not right at this point that the Taiwan dollar is particularly expensive. Like it's moved relative to where it was, but it's still not very expensive. Now, if that continues, it starts to become more significant. So, I mean, if you look at the currency over the course of the last 30 years, basically it's been between 28 and 33 to the US dollar, and it's still at that level now. If it breaks through 28 and continues to go down, that becomes more significant in the areas that you've talked about. So first of all, in terms of people in Taiwan, and secondly, in terms of companies. So if we think about people, first of all, one of the most obvious things that should happen from that point, if the Taiwan dollar continues to appreciate, is that going overseas and buying things that come from overseas becomes cheaper. And in fact, we can also already see that starting to appear in the Taiwanese data. So over the course of the last 2 to 3 months since the Taiwan dollar has moved, import prices have come down a lot because the Taiwan dollar buys more things from overseas than it did previously. And so it becomes cheaper to travel overseas, it becomes cheaper to go to Japan and so on. So from a sort of people's livelihood point of view, this potentially can be quite important in terms of people's purchasing power. So I think that's quite significant. For companies, obviously, it's a bit more mixed, because on the one hand, they also can import things more cheaply. And if you look at TSMC as a good example of that, well, they import a ton of stuff from overseas, right? Like all the capital equipment that comes from Europe and so on. So for those imports, that also becomes cheaper for companies. But obviously, they're also exporting overseas. And if the Taiwan dollar goes up, then potentially their revenue from overseas starts to come down. And again, we can start to see that appearing in some of the data that's coming out from how companies report their earnings. That said, one final point perhaps on this is that TSMC is a very large company and basically has a monopoly in some of these semiconductors in the rest of the world. So for the largest companies in Taiwan, this probably isn't too much of a challenge. But obviously there's a lot of SMEs in Taiwan, which was where Taiwan's livelihood came from originally. And for those sort of companies, this is going to be a much bigger challenge if the Taiwan dollar continues to appreciate from here.
Paul, that is such a great setup for our conversation, and I want to break down all those little moving parts that you spoke about. But before we go to that, let's talk about the fluctuation we've seen. Bloomberg, you said it's still within that range, but Bloomberg's called it a monster move. CNBC's called it once in a generational move. Why then so much attention to it?
So it is a big move. And so I suppose the thing to remember is the Taiwan dollar, the context for this is the Taiwan dollar doesn't really move. So the fact that there has been a change, right, again, so in that 28 to 33 range I talked about a minute ago, that's over the course of several years. And so what tends to happen when Taiwan cycle is good, when the economy is growing strongly and exports are doing well, the Taiwan dollar tends to appreciate, and then it gets to around 28 to the US dollar or thereabouts. When the economy is weak, the central bank is cutting interest rates, exports aren't doing so well, the currency tends to depreciate and get to around 33. So that's been the story of the course of the last 30 years or so. What's happened this year is that sort of seemingly from nowhere, within the course of about a month or a month and a half, the currency goes from around 33, breaks through 30 and continues to appreciate. So that's the context. It's a sudden change that hadn't been seen relative to what we've seen over the course of the last 30 years. So in that sense, it's very fair to say it's a monstrous big move, all the rest of it. That said, again, it's still not like this is particularly expensive, because what you would tend to think about of economies over the course of time, particularly in an economy like Taiwan, where it's obviously been very successful, like TSMC is a very productive company. It's not like Taiwan's economy is doing badly. In fact, since 2020 in particular, Taiwan is probably one of the few economies in the world that came out of COVID looking much stronger than going into COVID. So there's a very strong economic development story in Taiwan. And given that, over the course of time, rather than thinking the currency stays stable, you would think the currency should appreciate over the course of time. Now, economists would think about that in real effective terms and not just relative to the US dollar, but relative to all currencies. But leaving that point aside for a minute, you would still think that that range of 28 to 33 is very odd relative to the economic development that Taiwan's had. And so I think, again, in that sense, although it's been a very big move over the course of the last few weeks, in the context of Taiwan's development over the course of the last 30 years, it's still not that big.
Still within the range, but I want to pick up on something you said, seemingly from nowhere, but what do Trump's policies have to do with this? What do the US's overview on Taiwan, particularly the negotiations we're seeing, the tariff negotiations, have to do with the Taiwan's dollar? Because often when you read all this analyses, it is linked.
So if you read the government's line, it isn't linked, obviously, and that may be important to say, because the central bank has come out and said this is nothing to do with negotiations with the US. And obviously, I don't think any of us have any real insight to share on that. I think what we can say is that three things are going on. So first of all, before Trump became president, his Treasury Secretary was in the news saying that a lot of East Asian economies were getting unfair advantage, partly because of exchange rate undervaluation. Now, if we look at Taiwan's current account surplus, for example, as an easy way of thinking about currency undervaluation, it's not quite that simple, but it's certainly one of the things you should throw into the mix. The current account surplus is about 15% of GDP and growing very steadily over time. So from that perspective, if you want to think about those sort of economies where the US, before the current administration came into power, and we're thinking that these currencies look vulnerable because of the current account positions and therefore the valuation of these currencies, Taiwan would be one of those ones you would have to include in that mix. Now, I think, again, there's two other things going on which explain why the currency has moved. And it's not so much that these things explain the immediacy of the move, but it's the stars aligning which have allowed the currency to move in this way. And so the two other things I think are important is, one, and if you go back, like Taiwan's had no inflation for years. So if you think about monetary policy and exchange rates being linked to monetary policies, you usually tend to see currencies appreciating when central banks are raising interest rates because domestic economies are doing well, in the extent that that then pushes inflation up. That hasn't happened in Taiwan. Taiwan's probably the economy that looks most similar to Japan before 2020, in that there was very little wage growth and there was very little inflation. So why would the central bank be increasing interest rates, and therefore why would there be pressure for the currency to appreciate in that context? Mm-hmm. What's happened since 2020 is the economy, two things have changed. One, that the sort of hollowing out to China that happened, particularly after 2001 when China entered WTO, that hollowing out has ended, and we can see that in a lot of different data. And so Taiwan's economy sort of looks more stable than it had done previously. And again, after COVID, Taiwan has really taken off, and sort of in two stages. So first of all, during the pandemic, when there was the whole work from home thing going on, like you saw this massive increase in Taiwanese exports at the same time as Taiwan didn't suffer the big domestic lockdowns that other economies happened. So there wasn't the big slowdown in domestic demand, but exports did very well. And the second wave is this year, which is sort of extraordinary how quickly exports have grown this year. So exports in the first half of 2025 have grown more quickly than any time since the 1980s. So it's really a sort of extraordinary economic takeoff that's happened. And so those things, I think, also explain why there's more pressure on the currency today. You've got the mixture of Trump administration perhaps talking about the Taiwan dollar, like obviously we don't really know. The second thing is the economy at least looking more stable. And thirdly, actually starting to look like it's pretty hot, with the big increase in exports feeding into inflation rising a little bit, but particularly wage inflation also starting to increase for the first time in a generation. So I think the way I would explain it is, I mean, these things are difficult to guess from an exact timing point of view, but certainly coming into this year, it looked like the stars were aligning for some move in the currency to happen. And that's indeed what we've seen play out over the course of the last few months.
But over those movements and over the fluctuations, like you said, within that range, there still has been a lot of commentary saying that Taiwan Central Bank has been notably absent from what? Basically, I want to try and understand, what is it absent from? What was expected from Taiwan Central Bank? And what does Taiwan Central Bank normally do in these situations where the currency is moving very quickly?
Well, so first thing, Taiwan's currency doesn't move very quickly. That's sort of the point and why this has attracted so much attention. And one of the reasons for that is usually, and the central bank has a specific policy of smoothing changes in the exchange rate. Now, from a policy perspective, that's sort of understandable, right? Because big changes in the currency cause problems for companies and everybody else. So, usually you would expect the central bank to be able to smooth changes in the currency. Now, that's been the story of the course of the last 30 years. One of the consequences of that policy is both Taiwan's very strong current account surplus, meaning that there's already this big flow of money coming in. Now, if there isn't investors taking that money and investing it back overseas, the currency would have appreciated a lot. So what's happened is that the counterpart to the current account surplus is Taiwan now has this huge buildup of US dollar assets. And so if you look at the net international investment position of Taiwan, like now overseas assets are about more than 200% of Taiwanese GDP. So why is that important in thinking about what happens with the currency from a day-to-day point of view? Because essentially that's a huge stock of money belonging to Taiwanese people that is overseas in US dollars. If Taiwanese companies, households, businesses think, okay, actually we should have more Taiwan dollar exposure, that's a lot of money that can come in very quickly and therefore have a big impact on the currency. Now, historically, what tended to happen is most people assume that the central bank is going to be in the arena, coupled with global macro forces, meaning actually you don't need to worry about it too much and having US dollar exposure is fine. When the problem is that when there is such a large exposure to US dollars, if people get the sense that Taiwan dollar actually is going to appreciate quickly because the central bank doesn't either have enough firepower or perhaps because the politics isn't willing to step into the market to slow down exchange rate appreciation, suddenly there's a wall of money overseas that can come back into the Taiwan dollar very quickly. And that, I think, was what played out over the course of the last few months. Now, the central bank obviously still is important here and has a lot of ability to still control the exchange rate. But it is these two forces playing out. On the one hand, maybe a bit of erosion of the previous belief of Taiwanese businesses, people, and everybody else, that the Taiwan dollar really will be between 28 and 33 forever, at the same time as you've got this huge amount of money overseas that can come back in.
Okay, so I want to depict some of what you said in graphs and figures for our audience. So Taiwan's currency has been seen by many as among the most undervalued. Not only is Taiwan an economic powerhouse, its global financial clout is also larger than you may know. As we can see here, Taiwan's current account surplus has grown in recent years to huge proportions of around 15% of its economy. That is as export value has surged to over 470 billion US dollars last year, and Taiwan's external assets, the foreign debt it owns minus foreign ownership of Taiwan's debt, has jumped to over 1.5 trillion US dollars, and that's more than 200% of Taiwan's GDP. Much of that debt is held by Taiwan's massive life insurance industry. Can you explain why life insurers play an unusually large role in Taiwan's economy and how it manages the currency? I know this is very complicated, but just give us, in a nutshell, how does this work?
So if you think about the economy, there's essentially three sectors. You've got the financial sector, households, and corporates. Now, all of those entities can take money back overseas. And so essentially that's what we've seen playing out. And so among that, I mean, people talk about life insurance companies as being important, and they certainly are. But in addition, corporates also have a lot of US dollar exposure, as do households. Now, the life insurance companies in particular, why have they become so important? It's because they're the companies that go to the Taiwanese households and say, look, the return, and again, if we come back to the story about Taiwan's economy, for a long time, interest rates here were very low relative to the rest of the world because there was no inflation. So if you're a Taiwanese entity and you have Taiwan dollar savings, that's not a very attractive place to put your money because your interest rate is very low. Then insurance companies and other financial institutions will say, hey, well, wait. Like, we can take that money and we can invest it overseas and you'll be able to get a higher return. Or we can invest it, we will invest that money on your behalf and therefore you'll get a higher return. So as life insurance companies then say, well, we can invest domestically, but they then still have the problem that interest rates here are very low. And so what tends to happen is that money tends to be invested overseas, and therefore life insurance ended up with all of this money held in US dollar assets. Now, the issue around that for the currency, again, is one, that money is very large. And so if those come, and there's this issue of hedging in the sense of, like, so if you imagine that the Taiwan dollar suddenly appreciates, the US dollar value of those assets then goes down, right, because of the exchange rate translation. And so in that moment, companies will tend to think, well, we better get our money back into Taiwan dollars to try to offset the loss that will happen if the Taiwan dollar continues to appreciate. So you've got this first issue that there's a lot of savings in Taiwan, and people want a better return. The financial companies offer individuals a way to get a better return. Most of that money ends up overseas. That's the life insurance assets that they hold overseas. And then you've got the issue of how do they manage that money when there's a move in the exchange rate, which is often an incentive to try to bring money back home if they haven't hedged that risk properly.